Saturday, February 17th, 2018, Monaco 64, home of alternative economics and contrarian views. I like to talk about the petrodollar and China. I've made 3 videos on the subject. They're all 3 entitled China Delivers Knockout Blow to Petrodollar, Part 1, 2, and 3. First one was in September last year, second one in October, and more recently in the beginning of this year. I'll put them up in the cards above on the YouTube videos, and I'll put them down in the description as well, the links, if you'd like to listen to them. And I want to clarify and really talk about what it means, not only for the US, but for the whole global world monetary system, what's happening to the petrodollar. If any of you don't know, basically the petrodollar is the system we've had since 1971, when Richard Nixon closed the gold window, August 15th, 1971. The US was running out of gold. European countries were asking for redemption, which they legally could do. They could redeem every $35 for a troy ounce of gold. And gold was quickly running out of the US Treasury coffers. There were a few things they could do, though, aside from closing or defaulting, closing the gold window or defaulting. One thing would have been to raise interest rates, but they didn't want to do that. Politicians, central bankers, they're always a bit funny about that. The other thing they could have done is revalued the price of gold, i.e. devalued the dollar to make it, to make their debt more sustainable. They could have devalued the dollar, let's say, or revalued gold to $100 an ounce, and that would have stopped the flow of gold, So either way, it was gonna, I think they had that choice. And there are, I've read about John Exter, who was still advising some of the people at the Treasury, like Paul Volcker at the time was at the Treasury, and he talked to John Exter, and Exter said, you've got these choices. You raise interest rates, you devalue the price, you devalue the dollar or revalue gold, or you close the gold window. And Nixon, of course, decided to close the gold window, which opened a Pandora's box for the whole monetary system. For the last almost 50 years now, we've had this credit boom, an unanchored financial monetary system. But the way they've been able to keep the dollar going, and the way they've forced people to, or other countries or sovereign nations to invest in the dollar, was by having this agreement with the Saudis, which was engineered by Henry Kissinger a year or 2 after the closing of the gold window. Basically, they're going to defend Saudi Arabia, help them with their infrastructure investment, but Saudi Arabia had to reinvest all their oil earnings into dollars, especially treasuries. And that's how, and as oil is the most important consumable commodity in the world, and other countries, and Saudi Arabia is the biggest producer and still one of the biggest producers, and they ran OPEC, it made every country in the world dependent on having dollars to pay for the oil, and oil became traded in dollars. And that's how the US has been able to keep printing money and exporting debt since 1971. And but now the game is almost up. One thing I like to say, though, is that it doesn't mean that this is the end of the dollar itself, and it doesn't mean that the dollar is going to crash or go down because of this. The dollar's already been going down for over a year, from like 103.80, a high beginning of last year, to a recent low just around 89 in the dollar index. Is it to do with the petrodollar, monopoly coming to an end, the petro yuan becoming more important? Maybe slightly, but it doesn't mean that the dollar couldn't rise a few years from now and do really well. Look at the British pound. It was the reserve currency up until, just after World War One, maybe a little bit in the run-up to World War II. Since the Napoleonic Wars ended, for 100 years, the pound reigned supreme. In the early 80s, the pound dropped almost 1-to-1 to the dollar. But in 2008, we got up above $2 the pound. So even though the pound wasn't a reserve currency anymore, it doesn't mean that it can't fluctuate against the other fiat currencies. I think a reserve currency status, what it does is it gives the country that has that a lot of power politically and financially. But it doesn't mean to say that other currencies can't go up and down against that reserve currency. So what I'm trying to say, this is not the end of the dollar. It doesn't mean that the dollar is going to be, extinguished. But all I think is going to happen is that the political power of the U.S. abroad is going to diminish unless, and it could be a good thing in the long term, because it means the U.S. Economy will have to start producing things again, trading fairly with other countries. It's always funny when politicians in the U.S. Have a go at China for manipulating currencies. But I'm sorry, the biggest manipulator is the Federal Reserve and the BIS, who run the dollar system. But what I'm trying to say is that maybe it's a blessing in disguise. Americans will actually have, in general, to earn more, produce more, buy less, borrow less. And that could actually, because the imbalances we have right now, the triple deficits, budget deficit, trade deficit, current account deficits, they've been increasing for over 50 years, and they're not sustainable. And I think China sees that, and this hasn't happened overnight. The switch maybe to a multipolar world in which you have different currencies having importance. But China and Russia as well, they understand that they need something backing their currency. And that thing is gold. And that's why China and Russia have been accumulating gold, because they need to give their trading partners, especially the One Belt, One Road that they're trying to build, the Eurasian kind of economic bloc, their other partners, they need to feel safe that, when they sell their oil to China, when they get the yuan, they need to know that they can get the gold as well for it. And that's how it works. And that's how it will, that's why people are, you see the yuan oil contract is not backed by gold, but will not be backed by gold. But the fact that you can sell the oil, let's say Dubai sells the oil to China, they get the yuan, and then the people, Dubai can go and take those yuan and convert it in the futures market as well, in the Shanghai Gold Exchange for gold. So they know that it's there, and they know that China has a lot of gold reserves, and so does Russia. And gold is always a neutral. It's the best store value for 5,000 years, and it's a neutral, apolitical monetary instrument. And that's why even after World War II, we had the Bretton Woods. Gold was still in the system until 1971. The problem with fiat money is that you get this race to the bottom. There's no discipline. And a lot of the Keynesians argue, oh, we can't, fix the exchange rates. We need a free market. That's not really how it works. It's like having, do we have, when you measure length, feet or meters or inches, that measurement never changes. It's the same thing with value. Gold and silver have been measures of value and wealth. And I'm not saying you have to fix the prices, but it's based on the weight. And that's why we need to get away from calling currencies, names. Maybe talk about gold grams. But it will go a long way to helping, the monetary system, the financial system, trade. It's very difficult for merchants, businessmen, businesswomen, industry to always be having to change and adopt to a different store of value. If you use gold and silver, it makes it a lot easier for people to save, to invest, to plan ahead, and that's the excuse. The reason they have derivatives and hedging is because the monetary system is rotten. It will hopefully kill a lot of these derivatives. A lot of them are useless and not necessary. They're just like betting instruments. And believe me, I worked as a futures and options broker in the city for big institutional clients for 20 years. And it wasn't the OTC market, OTC derivatives, but I know about the OTC derivatives. And believe me, the banks in London, all they're doing is gambling with the derivatives. Some people use it to hedge, but it's just a manipulative. It doesn't produce any, how can I say, social or economic value, these derivatives. And the reason we have it is because interest rates, the monetary system, it's all, out of whack. There's no ruler, there's no fixed measure of value. So can you imagine if we change the how can I say, the standard for weights and measures and length every other day? It would be a mess. How much do you weigh today? Oh, let me check the exchange rate here. How, what's happened to the pound or what's happened to the kilo. Oh, how far is it from London to Birmingham? I don't know, actually, because the mile has changed today. And that's what we've got today in the monetary system. And I think that that's what China and Russia realize. Am I saying that China and Russia are the saviors of the world? No, but I think the petrodollar and the Anglo-American, rulers of the financial system, they've abused the system. And I think what convinced the Chinese that they needed to do something about it was the 2008 crisis, because the whole system almost went down the tube. China, of course, big lender to the Americans. And it's not the way to promote trade, growth, and cooperation. So that's what I think will happen in terms of the International Energy Exchange, which is ine.cn. You can find that on the web. They haven't announced really when the oil contract is going to kick off, but I've seen that they've had 3 circulars come out on the 14th of February, so just about 3 days ago. So the first circular says, Shanghai International Energy Exchange notice on the approval of 6 designated delivery storages. So they've come out and said where the oil can be delivered. They've got all the different companies. One of them is, and I'll read here, Sinopec Petroleum Reserve Company, PetroChina Fuel Oil Company, Sinochem Jingzhong Oil Staging, Dalian PetroChina Warehousing. So if they've announced who where you're going to be able to store the oil for this contract. The second circular, they announced here, notice of the approval of 3 backup delivery storages facilities. So they've got backups for delivery. And the third circular, the same day, 14th of February, notice of approval of 4 designated inspection agencies for crude oil futures. So they're going to have inspectors to make sure the oil is up to standard. So they're doing it very slowly. You know, it's not in a rush. And am I saying that once the futures start trading, that the petrodollar is going to disappear? No, this is just like a slow evolution of a separate system. And I think what's going to end up happening is that the yuan, or the renminbi, is going to dominate Eurasia trade, and the dollar is going to dominate still Europe and the West, but won't be as important as it is now even in Europe. I think the euro will be relatively stronger because the dollar isn't going to be as global as it is now. And I think gold will be very important again, because the Chinese and the Russians and the Eurasians will need to use gold to back their currency, because they need the credibility. And the dollar credibility is going down quite a bit, and that's why gold will also go up in value. It needs to reset. So yeah, before I finish, I'll just show you a few of some of the coins I have. One of them that I like a lot are the Buffalo coins, US mint. They're 99%. Usually the US coins are 90%, but this is from 2008. There's a Buffalo coin. There's a Indian head in the back. Very nice coin, 1 ounce. And then, yeah, well, I've got an Iranian coin. I got the Shah of Iran here. Nice coin. Apolitical, you know, it doesn't matter the Shah or it's money. And that's it. That's what I wanted to talk about. The knockout, yeah, the Petro Yuan, whatever you want to call it, is just going to be competition. It's going to knock out the dollar from the top spot. Everyone's going to compete. It can't be a bad thing. Of course, Americans are going to have to live more within their means. That's what it, not just Americans, but the West. And that's what I think it means to the world. It doesn't mean the end of the dollar. So if you enjoyed this video, please like, share it, subscribe to my channel if you haven't yet. And you can also follow me on steemit.com and on Twitter. And I'll talk to you later. Bye.